Well, all right, we're back for the last half hour of the day. I've been out most of the day, so I got back to a bunch of alerts and everything. But yeah, let's look at that last alert that I just put in there. It was NWN. Yeah, uh, pretty crazy day. You know, this morning you saw everything bounce back. Let's see how much we're up. Um, yeah, I mean, it's basically just erased whatever happened yesterday. I don't know what the overall market's up, but you know, futures are pointing higher. Um, let's see what the actual deal was. Yeah, rebound up 550. Yeah, so basically it just slapped all those. Anybody that shorted the market uh, just lost their ass. You know, because everybody was probably shorting this morning or shorting late in the afternoon, thinking they've got it all figured out. Quiet on the home front. That's what you get for picking a direction. I mean, you know, you got to stick with your plan, take profit, stop listening to gurus. I keep saying this. Nobody friggin' knows where the market's going. But we can take a look at some of these positions. I don't think anything really came back that hard, that fast. I think, well, what do we sell? NUE and INGR. So we did establish, what, 13 positions today. So those were all, we had used the trailing strategy yesterday. So you can see there's one TCF we're in. CMP, I think we bought that yesterday. No, we bought that today. KRC, still some stuff down. You know, things just do their own thing. So you can't depend on direction, right? Oh yeah, well I got in, you know, I'll just put $1,000 in there and see what happens. That's gambling. You know, like when are you going to take profit? What's your target? How are you going to, how are you going to manage the position after that? The reason why I can manage so many positions is because I'm small, I'm agile. I don't get bogged down in, if something's crashing, who cares? Doesn't matter, just DCA, dollar cost average it. Don't ever dollar cost average it above your mean or your average price. If you do, you're going to lose money. That's just the way it works. So yeah, not really a heck of a lot to talk about. It's the 335. Well, I guess we can change that. I was saying that, since we took a profit today, we're not worried about, taking any more. It's only 857, but see, what I look at is what did I say, 857? What I look at is this number here, the average per day. See, we're still 76 the week prior, 76. As long as I'm up above, let's say 60, $50, $60 per day on accounts these sizes, I'm okay with that because I know that, I've got dividends coming in and I'm making profits. So you're going to have slow days, you're going to have no days, 0 days on dividends more than you will on your profitable days. You want to always try to take profit no matter what. I mean, if it's only $1 and you're going to lose $1, don't be stupid and make a trade that's just going to be a wash. But it all adds up in the end. And people can't see this. I've been doing this for 27 years, and people just don't understand the value of the number of occurrences. I mean, Sam Walton was a genius, That's how he became a billionaire with Walmart, because he saw the value in numbers of occurrences. Instead of selling, look at it this way: you can buy a space shuttle once, right? And it's going to cost you X amount of billions of dollars. If you go to Walmart says, "Hey, I want to buy 10 billion cans of beans, and I want 10 cents each." Well, there you go. You're a billionaire if you sell all of them, right? But he's not going to try to sell a can of beans for $15. He's going to sell it for a little bit over, and he's going to make lots of occurrences. you have an opportunity now with zero equity fees. I still pay $1 per side. You know, Interactive Brokers is one that didn't follow suit. I mean, you can get zero fees, but you don't get these fancy platforms and everything else. But I don't even know what it looks like. I think it's called, what is it called? IBKR Lite, LITE. You know, but all the other trading platforms that are out there have zero fees. I don't know anything about Robinhood. You know, I have accounts with TD Ameritrade, E-Trade, places like that, Merrill Lynch. It's just you spread your money out as well because you don't know if something can happen. Anything can happen at any time, and then you just don't want to be hung out to dry because all your money was in one place, one position. You know, that's risk. Now, when you get, you know, if you're like Warren Buffett and you've got billions of dollars, you know, he's just sitting on cash. You know, that's all he does is pull in cash every quarter on everything that he's got. He doesn't care what the price is. It doesn't matter. He's long-term holder. And you can do that with that kind of money because he's not agile. He can't move around as fast as we can. You know, there's going to be a point in time where I can't move that fast, you know, on certain accounts. So these small accounts, yeah, these are fun, you know. You get to come in, you look at it, say, okay, what's on my scan? It's like, all right, hey, I'll buy a little bit of this. But I always keep in mind, you know, I'm not in a rush. I always look at net liquidity. If you know, if you've got under 100,000, you can't go big. You know, you've got our scans come up and they tell you, okay, you can go 10% of, you know, the max shares. And the max shares are determined by the price of the stock against your account. I mean, come on. You don't want to put all your money into one basket, right? It goes down, what happens? You know, it goes up. Oh, yeah, you're a genius. It goes down, you ain't going to tell a soul, are you? I'd rather be a winner every day. We've been a winner every day for 342 days now. If you don't believe it, you can just look at, I got plenty of videos out there. I show all the statements. You make up your own mind. But what are we looking at? Let's see, is there anything else that looks, everything's either a little green or a little red. We got nothing major except for this one up here, MTB. We bought that today. And we've had that for a while. BOH, did we buy that today? Yep, bought that today. I have no idea where it's going. Do I know if it's going to go up and hit that red line? I have no idea. Get that thought out of your head. Don't look at it all day. BOKH, it's another bank. It's been there a while. Seagate. I know what some of these companies are. You know, I've been doing this long enough. I see the symbols all the time. But something like this, Boston Properties, I know I've seen it before, but I can never remember what it is because it just doesn't come up enough. But it pays decent dividends, so, you know, was it paying $3.92? That's not too bad. You know, you got, well, max shares would probably be like 10 on something like that. You know, it'd be under 14, it'd be under 15, it'd be 14 because when you do the rounding, we just want to keep with we're going to try to stay as low as possible. And I know that flies in the face of, you know, everything that you've ever learned that, you know, you got to have size to win. And I was like, well, the problem is your size can hurt you. So stay small, be agile, and take profits. So we've only had two sells today and 13 buys. So we're okay with that. But what did we get in dividends? Wasn't much. It's like, 0 dividends today. So we have X dividend dates today. So this is what confuses a lot of people. I get questions on this all the time. It's like, okay, what did we have? Murphy Oil. Where's that one at? So Murphy, go over to Murphy Oil. Where's it at? It's on this other account. There it is. Okay, so Murphy Oil is going to pay a dividend, right? And you see it right there. So you have an X dividend date, that's tomorrow. That's when it executes. It says, okay, we're going to pay. And then it's going to record. It's going to record that on the 17th. So you got 3 days until it's recorded. So you need to hold it until at least the 17th before it's recorded, and then they will make, that goes to your, well, in Interactive Brokers, it would be dividend accruals. So whatever you've got, in this case, it would be $1.25. Let's just add it up here, 47 multiplied by 0.125. So, is that right? Yeah, $5.88. Yep. Yeah, it's only 50 cents per year. So see, that's pretty low. Used to pay a lot more than that, but with oil prices down. But either way, so that's going to go to your dividend accruals, and it's actually not going to get paid to your cash account where you can actually use those funds until June 1st. So this is why you have all these spread out days in between, getting paid, and that's why I'm doing this, just to give people better understanding. So when we're actually paid the dividends, that shows up as, like today, we didn't have anything paying today, and all these days here. But you can see at the start of the month and usually the middle of the month, you're going to see the bigger payments come in. And if we can keep them consistent, right, and keep our trading consistent, and we end up with numbers like this, 1,500 and 1,600. Now this might be lower this month. It might be higher. We don't know what the market's going to do, but what we do is we put ourselves in a situation where we're constantly taking profit, we're constantly growing. We're never taking a loss. So when you're looking at these charts, you're saying, well, if you never take a loss, what are you doing? You're collecting this dividend. So this is going to show up here tomorrow, right? 12 cents. If you're never taking profit, all you're ever going to get is dividends. So this is why we have this where we want profit, right? And if we go back to this chart on Murphy, where's our profit line? Well, it would be above that 100, right? Or our mean. So right now, we're maxed out on shares. We have 47. That's the max shares that you're allowed to own. Now, if this changed, let's say it went to 48, I could buy another share. If it went to, now it would have to come up not on the scan so much, but if it hits this 50%, it doesn't have to be on the scan because we're still in this rotation. So it's interesting, maybe that goes up, maybe it doesn't. I don't know. We just have to watch and see what the scan tells us, because there's a lot of numerical values that go into those. But what am I looking at here? UBSI. It's a lot easier to, this shows you an obvious where it's going, but I just like to look at the numbers to see what's actually moving. So EOG is down. I think we bought that yesterday, maybe. Yeah. So we got a few that are down. That's fine. What was that one? USO, that oil. It's an oil fund. Just seems to be hanging out. There's like no direction to it at all. Just fine. MO. What else we got here? Excel. Yeah, see, I can't tell which direction stuff is going. I'm just making sure my charts are up to date, because I look at so many different charts. You have to make it easy where it's quick. If you're sitting there going, well, when do I want to take profit? And when I already know, okay? That's why I stay on top of this stuff, because it's easier if you follow rules. Then you don't have to think about it. So there's that INGR that just sold today. So we cleared everything out. Did I clear everything out on that chart? Let's go back over to Classic, because sometimes it doesn't show up here. INGR. Yeah, we cleared it. And we'll go back over to Mosaic. Where's INGR? Yeah, well, there it is. So CATC, VSI. We're just looking to make sure that you know, we have our orders in where they need to be. Now, we just bought that today. When was it? It was like the second buy we had this morning. So it's got about another 20 cents. CMA. Oh, okay. Here's one that we didn't put a. Let's take a look. I don't think we. I know we bought that. Did we not? Must have been. I missed this one. So this is why you go back through and look. See, totally didn't put a closing order in on this, but you get busy doing stuff. So 78.54 plus 272, and we have 2 shares, so we're going to add 50 cents. That equals the dollar. And why did that happen? 78.54 plus 272 plus the 50 cents. The 50 cents covers the dollar for the commission. And if you have a different, if you got in at the exact same time and you have commission-free trading, you're going to get out before me. So don't tell me I'm leading people. Somebody said that to me the other day. I'm like, okay, pal, you don't even understand what I'm doing. So 81.80. So 81.80. It's a lot easier if you have the scan, then you can be in before me and out before me. How's that? So yeah, I'm leading people. That's right. I have trust in the system. I don't lose money with it. And you know, people making small trades. Institutions are my enemy. Hedge funds are my enemy. If they wanted to stop me from making a buck, they could do it. But they look at this and they see that order sitting there, 2 shares, they could give a rat's ass about it. They're not interested in that. I want to be taking what they're giving me. I don't care. You do this across the board. When you start getting up into 1,000 shares, yeah, they're paying attention to you. All right, so CMA is in there. Well, let's make sure that we got everything. So what do we got? BOH. Okay, that's in. Leg. And now I just put leg on. USB. It's got to be on another account. There it is. Yeah. What I'm looking for is, like this one here. That's the reason why we don't have anything on there is because it's off the screen. The strike price or our sell limit would be off the screen, so there's no point in putting it in there. This FTF, boy, it's struggling. It's been there for a while, 263 shares. Let's take a look at the chart. I haven't looked at it in a while. Yeah, I need to get rid of some of this. You can see it's changed in the past, right? We'll have to figure it out, but it's got to come up on the scan. See, the problem is I need to check it, and sometimes I just let them go. It's paying 93, 94 cents, but I mean, we'd still have to get it back over, into the green before we do something with it. So if we had a max shares of 250, we could unload 13 at the even point, right? And that reduces our risk a little bit. You don't really make anything, but you reduce your risk. That's what this game is all about, keeping your risk low. These small accounts, you start getting up into these, if everything is max shares, you're pulling down some dividends, right? Larger accounts that I manage, they're pretty automatic. I don't have to watch them all day. Dividends just keep rolling in. And you don't pay as much on taxes on dividends as you do trades, but trading is important, especially when you're small. You're going to sit, your money doesn't grow as fast. When you got big money, great example, I use it all the time. Warren Buffett, Coke, 400 million shares. It's equal to $150 million a quarter in dividends. This is why he doesn't trade it, because it's too easy. Why would you stop? Like, okay, yeah, like what could you do with $150 million, right? Well, 10% of that a year in the market's 15 million. So you got to keep running these numbers through your head. Once you get up to a certain stage in your accounts, you'll realize what I'm talking about. Once you get over the 150,000 mark, you really start to see an acceleration in both dividends and the size of your trades, because you're working with 20%. And, you know, if you can pull down, let's just give you an idea. If you're at the 20% level, which I have a lot of, you know, clients that are at those levels, 30, 40, 50%, you start looking at these numbers. All you do is multiply this 95.50, multiply that by 2. That's the 20% level, because you're just doubling everything, because now you're in a different risk profile. If it drops down below 100, you go back to the 10%. The thing is, you're not going to fall down below that unless something weird happens. You know, like some company that, you know, let's say multiple companies go out of business at the same time. It's just not going to happen, because the money just keeps flowing in. This is the beauty of this system. And people talk about dividends all the time. You know, oh, you just put all your money into the high-paying dividends. You know, like Coke, it's 3%. You know, like the dividend amount is, you know, good in some respects, but when you're small, you need to be getting some return. You know, but these aren't. Look, 1.9%. What's the bank giving you? 0.5. Okay, this is actually a bank, Bank First Corp. It's paying, in its stock, is paying 1.9. So it's got a dividend tomorrow. It's 10 cents, right? It's $1.20 per year. Or I'm sorry, $1.36, 34 cents per quarter. That's ATR. And this is, when you see the monthlies, I like those. I mean, you just got money coming in constantly. But a month goes by pretty quick when you're in the market. So once you get your size up, you'll be able to see, even at, you know, the interesting thing is if you've got a small account, that's why we have this small account, so it doesn't seem unattainable. You look at this one here, okay, right now we're only bringing in, say we're 27,750, that's constantly changing the market value. But if you look at this 20,320, we're earning 5.56, right? So that's about $1,050, thereabouts. So if you're making 1,050, and let's just say you're making twice that on your trades, right? So you got, now it's 2,000. That actually comes up to 10%. So if it's a crashing market, this value is going up, and what are you doing on the way down? You're buying more. The whole idea is to constantly have cash on hand, right? In this count here, we've got cash on hand, 10,823. Because see, it continues to grow. If something's moving up, it's selling. We're not waiting months for, okay, hey, I bought this at 24.44. I want it to go to 48.88 because that's 100% profit. You'd be waiting a long damn time to cash that out. In the meantime, you're making 6.2%. Well, if I can make that 6.2% in 1 year before this, you know, it's $1.59 multiplied by how many shares? So that'll be about $30. It's 30 plus. So 159, 160. So it'd be like $32. Somewhere around there. So we're getting pretty close, right? Gain. Still got to go up a little ways. Let's see. Yeah, about 32. So it's got $10 to go. This is my point, though. Continue to hit the small ones. If you've got 10,000, stick with the stuff that is going to pay you higher percentage yields and monthlies. and I direct people over to the CEFs. You can pick and choose. You can get our scan. This scan was light this week. We only had one show up. It was BBN. Let's see if we still have it on there. Yeah, it was BBN, right? So had a max shares of 137. If you've got $10,000, the max shares that you can buy is 14, right? Its yield is 558. Okay, so like if you ended up with max shares, I don't know, 2 years from now, you'd have a total of 30 at this price, because the price is constantly changing, right? This is just static moment in time. If the price is 25.15, your total investment would be 34.45.21, and you'd make 192.24 per year. And you can break it down to the day if you want. But my point being, you're not trying to hold this for a year. You're putting in that dividend amount, so 25.15, and you're going to add your dividend amount, because that's what you want to get for the year, but you want to get it quicker than the year. If it doesn't work out for you, you still get it. It's just, can you get it faster? Market conditions. You can't control the market. Do what you can. If you buy it at 25.15, then you can only buy it below it when you're adding to your position. So if you know what your max shares are, it's going to be less than that, right? Unless you bought it every time at 25.15. But the market goes up and down. So if you're getting it, let's just say it's creeping on down, this number is going to be lower. It shouldn't say max shares, it should say max investment, max cash. I don't know how that got in there. Yeah, max cash. So that would be, and I hope that is clear, but you don't want to be going all in at this level, because if you only have 10,000, then you're putting in over 1/3 of your account. Or, I'm sorry, what's that? 30% of your account into one stock. Now, if you're just happy making 5.58%, or you've got a crystal ball or something that's telling you it's going to go up, and you're just going to sit on it for the rest of your life, you can do that. You can make that 5.58%. So you're going to make 192 per year, period. That's that simple. This is where people don't like dividends, because they're like, well, I can make more than that if I trade it more on options. Well, you can trade it more too, just by trading stuff that's more volatile. If we look back at that one, this is not very volatile. One being kind of even with what the market does. So it's moving at about half the rate of what the market moves. So if the market goes up $1, it goes 50 cents. It's not super accurate, but it's accurate enough to let you know that it doesn't move much. So let's just take a look at it on the chart. BBN. So you can see it had a hard drop yesterday and never did recover, but it doesn't move much. Look, 24.40. Let's see, to 25.15. This is the range, right? For the week, not the month. Now let's look at something that moves a lot. And we can look at that, and let's say this one here. Well, PP is not a good example. CFFI. Let's see what that looks like. So you can see that same distance on the chart, right? If we look at it, now you're looking at a $4 move. This is why charts are misleading, and I don't believe in any of these. I tried all that stuff back in the day when I first started investing. It's like, oh yeah, I'm going to find all these cool things. You can have a mess in front of you, and then you're like, what the hell am I trading off of? Once you figure out that the easiest way is to get rid of all your indicators and just trade off of, value, say, okay, this is what I paid for it, and this is what I'm willing to pay for it next. This is in stone now. Like, you can see the order sitting there, 38.77. Came down, hit our alert. I'm ready to buy it at this level. It didn't come down any further and went back up. It's like, oh, well, I guess I'll just get paid the dividend, or it will hit my sell limit, or it's going to come back down and hit it, or it's just going to travel around in here for the rest of my life, and I'm just going to make that measly 38 cents on 2 shares, which is going to give me 76 cents. I don't care. It can do whatever it wants. At this point, it doesn't matter. The max shares on it are 28. So if it comes around and says, oh, hey, boom, hits there, comes back down, hits another one, hey, now I've got 6 shares, if this number stays the same. Once that rotation is complete, then we start looking for it on the scan again. This is just one strategy. The other strategy, another strategy that I have, that I use on different types of accounts, is what we're doing is we're getting in, and if it comes up on the scan, regardless if it's below this level, okay, you can buy as long as it's below. And I have a lot of clients that do that they like more action. I like to have more stocks. You know, I like to see the winners that are up here, and I like the losers to come down and DCA and maybe come back up, because look, if this DCA's right here on this level, it only has to come back up here to this 43, 44 range, or 43, 90, 40, 44 range to be profitable. Maybe whatever that distance is there, I don't know. Let's see what it is. Yeah, it just has to travel $1.52. So I just moved my strike point down by moving my dollar cost averaging. It's simple. So take a look at it. Good day. Not, you know, tremendous day or whatever, but still in the game. Still no losses. That's the whole game. And you just keep seeing the profits grow. You keep seeing the accounts grow. And it's a slow process. And it's kind of like watching paint dry. And that's why I tell people, don't sit in front of your computer. You don't need to. Trust that the market's going to take care of itself. It will. I mean, it's been doing it, you know, for a really, really, really long time. And, you know, when something comes down, you take advantage of that. And this one's down $1.78. Take a look. Okay? It was on there. We take it, we buy it, and we manage it. That's all we have to do. At that point, if you want, you know, if a day comes up and you haven't got any profits, you're looking at this one, you're like, hey, what's this gain at? Well, it's not moving much, but what does it pay? You know, this is where you start using your head. Say it pays $1.59 a year. Well, that's still over that $1.20 that, you know, I want to make. Now, that's my number. If you want to go down to the lower dollar, you know, you can ask, and I'll put that on the scan as well. But as it is right now, there's so many stocks that come out. It's just not really worth it to mess with the lower dividend paying stocks until maybe you run out of stocks to pick. Maybe you're fully vested. Hadn't seen that happen though, because you're constantly in and out. But anyways, that's it for today. Guess we'll catch everybody in the morning. Friday's tomorrow. We'll show the rest of our scan for the week because it's only good for a week. And we're done. Later.